Hello, everyone. Philipp Schaedler here with my monthly real estate report. I'm going to make it as quick as possible. I'll make this a short so everybody can go about their day and just get the important info. Let's see what we're going to talk about today. So the current 30-year fixed mortgage rates are around 6.25. Nothing much has changed there, unfortunately. Co-ownership is on the rise. We're going to talk about that today. Existing home sales rose in May 2026 to a seasonally adjusted annual rate of 4.17 million units. That's from Realtor.com, the highest pace of the year and up 3.2% from prior May last year. This beat expectations, but remains near 15-year lows and about 20% below long-term averages. JP Morgan says prices are holding up better than expected in many metros, despite higher inventory, supported by low distressed sales and strong equity for existing owners. Forecasts for 2026 generally call for a flat to modest growth, 0 to 2.2%, with incomes outpacing prices in some regions to slowly improve affordability. Might not be happening fast enough. And then also we have the Malibu land, 2.1 acres for sale with incredible views. Now, let's look at this real quick. Co-buying, co-ownership, right? So a lot of people, or many people, I should say, are complaining that they cannot afford to buy a home right now. Either the rates are too high or the price is too high. Well, if they don't, then they miss out of the American dream of a home ownership, right? I still think even with co-ownership, you can create some equity and make it a good investment. But there are a lot of points to look out for. First of all, you really have to know the people well that you're buying a house with, right? This is going to be very tricky. It has increased, if you can see here. Let me see, make it a little bit larger. So 2021, it was 25% of co-owners, and then 2026 is 31.5% with 64 million people co-owning houses. That's huge, right? That's a big increase from 25% to 31.5%. People are looking at this and thinking, well, I still want to co-own a house. However, here's the thing. Let's look at the benefits. The benefits of co-owning is, let me get this a bit bigger, is sharing costs, obviously, right? So this is a huge benefit. So let's say the roof needs to be done, whatever, it's 30 or 40,000. Everybody pays 10,000. So it's much, much less investment there. Affording a better home, you can maybe get a bigger home than you had. With 4 people, I would definitely say 4 bedroom, 4 bath would be advisable. Something like that, maybe even bigger, but that's probably I would say around $1 million, $1.5 million mark here in LA. In certain areas, investment opportunity, 54%. Yes, you still can make some equity, you can still earn, not as much, obviously, because now it's shared with 3 other people. Sharing responsibilities, building equity, tax benefits, and strengthen relationships. Right now, let's look at the downside. The drawbacks are interpersonal conflict. Yes, you really need to know a person really, really well. And as they say, even though you know a person really well for many, many years, they can still do things that you don't agree with, right? So for that reason, legal and financial complications need to be addressed or avoided by having a real estate attorney draw up an agreement who owns what and how it's being distributed. And, if there is if you have an LLC or if it's tenants in common, where you can, give the part to a person if in case one person dies, somebody inherits it. Difficulty selling or transferring ownership, that is definitely a big deal in my eyes, because let's say you're in it, everybody got approved for the loan, and 5, 6, 7, 8 years into it, somebody wants to leave. Well, you would have to either get a second mortgage and pay that person out, which would most likely be the smartest thing to do. If that's not possible due to financial restraint, you would have to find another person. And as you know, it's very difficult to find 3, 4 people to live with. And now you have to find yet another person, right? So that's where the challenge comes in. Risk of default. What if somebody defaults? One of the 4 people all of a sudden loses a job, cannot pay. Then the other 3 have to step in and pay more. So this is where it gets tricky, and this is where you need a specific agreement from a real estate attorney that everybody understands very clearly. So there's no issues there. Unequal investment, yeah, that's an issue as well. Inheritance issue, like I mentioned earlier. Impact on credit. And now another situation is when you have 4 people applying for a mortgage. let's just say it's probably unlikely that everybody has the same credit rating, but let's say three have really good credit rating, 800 or something, and the other one has only 600. That is going to influence the credit, the interest rate, right? So that could be an issue. So not only do you have to get four people that you get along with really well, you have to find four people that have decent or good credit. That's another big issue to consider. Now, let's look at some of the other issues that come in. I'm just going to make this really quickly here. Here you can see clearly legal ownership structure, decide, tenancy in common, most flexible, unequal shares possible. Each owner can sell their share independently versus joint tenancy, equal shares with right of survivorship passes automatically to survivors, right? So these are the two main ways to own a house with several people. The other one is an LLC to hold the title, protects personal assets, and makes future transfer easier. So that may also be a consideration here, which probably is not a bad idea. Always get a written ownership agreement drafted by a real estate attorney, cover percentages or ownership, contribution splits, decision-making roles, and dispute resolution. Financing and money matters. I'm going to leave this text in the because I want to make it short. I want to leave this text down below in the comment section. But the bottom line here is strong relationships can survive this, but weak ones often don't. The clearer and more formal you are before signing, the better. Many people regret skipping the detailed written agreement. So this is huge, obviously. I mean, that's something really to consider. Let's see. U.S. housing market at a glance. Active listings right now, this is from homes.com, is 1,434,033 units. New listings of 523,008. Days on market 57. Days on market here in LA is probably more like 65 days. Last 12 months sales is 3,546,669. So you can see there's still activities going on. There's always in every market there is transactions happening. Let's see. This is another quick about co-ownership. Legal structure, financial responsibilities is very, very important. Clear delineation of mortgage payments, maintenance costs, utility bills. This is huge, if you do co-ownership. Exit strategy, you have to have an agreement of selling or buying out co-owners. This is huge. Property usage rights, specific terms about occupancy, guests, and common area usage. Yes, you have to figure out, can four people bring guests? How is that going to work? So that is all going to be a little bit tricky to deal with. Let's see, what else do we have? We have this. This is the listing in Malibu. I have one developer right now that's interested. So this is the area. Let me get this a bit bigger. This would be the area where the house is, and the property goes all the way down to PCH. It's probably about 300-400 feet from the water. I'm not sure if you could build another house here, but anyway, if you are interested in that, I have a developer that I'm trying to get the seller to agree to a deal. The other situation we're discovering or exploring right now with this developer is to find an acreage in Los Angeles or around Los Angeles where not tiny homes, but smaller homes could be built, right? There was a project in Palm Springs, tiny homes. I think it was very small, 400 or 500 square feet, but many of them, and they were sold out before they were even completed. So there's a demand for that. So two options to own a house, in my opinion, for individuals or for either several individuals or one. One would be a tiny house. There are not too many around here in Los Angeles right now, but I'm talking to a developer to hopefully find and maybe even get a government assisted property or get some assistance, financial assistance, because we would be creating homes for people who want to leave the high rental market, right? So they can actually afford home ownership. So one would be a tiny home, and that home would maybe be 800 square feet. If you plan it really well and have somewhat of a garden, 800 square feet is not that bad. And again, you're owning, you're not renting. When you're renting, you're paying your landlord's mortgage. You want to pay your own mortgage and create some equity. Anyway, this was a little bit longer than I had planned, but if you have any questions, call me at 310-918-2260. If you have any questions in regards to co-ownership or even tiny homes, we're not quite at the point that where we get people on the list, but I would imagine if we would find a property that they would sell really quickly, because again, people looking for a way out. Thank you so much for watching this, and I'll see you next time.